Welcome back to the Deep Dive. So if you've glanced at the financial news lately, you've probably seen it. Headlines just screaming about stock market highs. It feels relentless, right? This drive upwards. But what if? What if beneath that really robust surface, there are maybe some subtle cracks starting to appear? Today, we're doing a deep dive into exactly that. The market's current momentum? Yeah, but also the potential for reversal risks. We're looking at an analyst's view that triangulates key metrics, technicals, and latest news.
That's right. And our mission here is really to cut through the noise for you. We want to pull out the most important nuggets, help you quickly grasp what's really going on, spot those surprising facts, understand the nuances you might miss in the day-to-day headlines.
Like a shortcut to being properly informed.
Exactly, what's happening beneath the surface.
Okay, let's unpack this then. We know the major indices are hovering near highs, 52-week, even all-time highs. But what actually happened today? How did things move?
Well, the S&P 500, it slipped a bit, down about 0.5%, closed at 6,411.46. The NASDAQ composite, though, it saw a bigger fall, dropped around 1.5%.
Okay.
Ended near 21,314.95. But the Dow Jones, well, it nudged up, just barely.
A tiny bit.
Yeah, gained about 10 points to finish at 44,922.39.
Right. And what's fascinating, like you said, is despite today, they're all still just a hair off their 52-week highs. The S&P's high is just over 6,480. NASDAQ's around 21,800. Dow's over 45,200. So yeah, sustained bullishness is definitely the signal. But today's losses, especially that NASDAQ drop, that shows pretty clear signs of profit taking.
Oh, okay.
Yeah, as the market bumps up against some key resistance levels, this is exactly where those subtle cracks we mentioned start to show. It's a pause, maybe a natural one, but significant.
Okay, so those are the immediate shifts. But what about the bigger picture, the macro forces, the news events? What's shaping this underlying mood? Well, number one has to be the Jackson Hole Symposium. All eyes are glued to that. Specifically, Fed Chair Powell's speech on August 22nd.
Right. Everyone's waiting for hints about rate cuts.
Desperate for clues. The market needs to know the timing. Any word from the Fed there is absolutely critical for sentiment right now. Huge driver. Then you've got Q2 earnings. And this was actually a pleasant surprise.
Oh, yeah. How
It smashed expectations, came in at a plus 11% growth for the S&P 500. The consensus was only looking for about 4%.
Wow, that's a big beat.
Huge. And get this, 60% of the companies didn't just beat. They beat by like a standard deviation, a significant margin. That really fueled optimism big time.
Yeah.
But here's where it gets really interesting and maybe a bit concerning.
Okay.
CTAs, systematic funds, they are currently max long equities.
Max long, meaning they're fully invested.
Basically, yeah.
Yeah.
They are all in on stocks. And here's the kicker. While that sounds super positive, it actually means their dry powder, their buying power,
It's
pretty much exhausted.
So who's left to buy if things turn?
Precisely. It's not just bullish, it's a warning sign. The market's biggest engine might be running low on fuel. And one more thing. Unusual sector rotation. Last week, we saw small caps, value stocks, cyclicals. They actually outperformed.
Which is weird when the market's rising overall.
Exactly.
Right.
It's rare. It often hints at a late cycle dynamic.
Oh.
Normally the big leaders pull everything up. When these other segments lead, it suggests the bull run's energy is shifting, maybe nearing maturity.
That's a lot to juggle. That idea of the main buyers being tapped out is potent. So beyond the headlines and the macro stuff, what about the charts? What are the technical signals? RSI, MESCD, moving averages. What are they telling us about these indices?
Okay, let's break it down because the signals are pretty diverse, different stories here. For the S&P 500, the momentum indicators like RSI and MACD, they're generally flashing sell. The RSI is dipping towards oversold, meaning selling pressure's high. But that could also mean a bounce is near.
Right, the contrarian signal.
Kind of. Short-term moving averages also say sell, but the longer-term ones, 100-day, 200-day, they still signal buy. Okay. So the takeaway for the S&P, momentum's cooling clearly, but the long-term trend still holds. But watch out for volatility if selling keeps up.
Okay. And the NASDAQ. You said it fell harder today.
Yeah, it's definitely feeling the pressure. Its RSI is firmly oversold. Strong sell. MACD also says sell. Short and medium-term moving averages all sell. Only the very long-term 200-day MA is still a buy.
So pretty weak technically, short-term at least.
Very. Now, those deeply oversold readings could trigger a short-term bounce, sure, but the overall trend risk for the tech-heavy NASDAQ, it's undeniably rising.
Got it. And the Dow, the outlier.
Yeah, the Dow's different.
Yep.
Its RSI is neutral, MACD is a clear buy, but its stochastic oscillator is way up in overbought territory.
Overbought, okay.
And most of its moving averages signal buy, except a few very short-term ones. So the picture for the Dow, near its highs, strong momentum, yes, but being so overbought, that warns of a possible mean reversion.
A snap back towards the average.
Exactly. When something gets stretched too far, it tends to come back.
That's really fascinating, the mixed signals across the board.
Yeah.
It's like different parts of the market aren't quite agreeing. Does this split show up in specific sectors or companies too? Where's the leadership or the weakness?
Absolutely it does. Leadership-wise, industrials, technology, and communications are currently heading the S&P 500 uptrend. Piper Sandler actually says all 12 sectors are technically in uptrends.
Okay.
But, like we mentioned, that recent rotation where small caps and value outperformed, that's that classic late cycle signal again. It's a shift worth watching closely.
Right, the unusual suspects taking the lead for a bit.
Yeah. And here's a really crucial point about concentration. You ready for this?
Lay it on me.
Just 5 stocks, NVIDIA, Microsoft, Meta, Broadcom, and Palantir, they account for a massive 56% of the S&P 500's entire year-to-date gains.
56% from just 5 companies.
56%.
Yeah.
The implication is huge. Any reversal, any slowdown in AI or tech momentum, especially from those giants.
It could hit the whole market disproportionately hard.
Exactly. An outsized impact. The reliance on just a few names for the overall market return is, well, it's something you really need to keep an eye on.
That concentration is just staggering. But I guess the argument is they're fundamentally strong, right? Is it pure risk or maybe a flight to quality? It's complex. So, okay, let's try and bring this all together. Based on everything, the macro, the technicals, the concentration, what's the overall read on reversal, risk, and momentum?
Right, synthesizing it all. While the indices are near highs, the key thing the analyst notes is we're seeing overbought and oversold signals flashing at the same time. It's contradictory.
A tug-of-war.
Pretty much. And with those systematic funds, the CTA is already maxed out on stocks.
Their buying power is spent.
And short-term technicals looking weaker on several fronts, the risk of a sharp pullback, it's definitely rising. And that risk gets even higher if the Fed's comments at Jackson Hole disappoint the market's hopes for rate cuts.
So Jackson Hole could be the trigger.
Could be a major catalyst, yeah. So, our advice, or rather the analyst's advice interpreted here, is to watch for signs of more sector rotation and maybe a potential shift towards defensive leadership if this profit-taking spreads beyond just tech.
That would be a clear sign those subtle cracks are getting wider.
Exactly.
So there you have it. The market looks strong on the surface, maybe robust momentum, but underneath. An increasing chorus of subtle warnings, divergences. It's a really complex picture.
It really is. And given that even the experts have to triangulate all these different data points, macro, technical sectors, it makes you think, how might understanding these diverse signals, these mixed messages, change how you interpret the daily market news?
Yeah, it definitely gives you a much richer, more nuanced perspective than just the headlines.
Absolutely. Well, thank you for joining us on this deep dive today. Keep exploring these crucial market dynamics, and we'll see you next time.